Hi, everybody. This is Fred Bruin with Remax Parkside Real Estate. It is Monday, May 4th. Today, I'd like to talk to you briefly about homeownership and the trend that we're witnessing and why it's trending the way it is. So I'm going to share some PowerPoint slides with you. I'm sure you love these, huh? So this first slide here shows the U.S. homeownership percentage rates, and we can see back in 1996 here we were at about 65.1% homeownership and climbing. Peaked in 2005, 2006 at 69 plus percentage homes were owner occupied. And then, of course, the Great Recession hit, and we witnessed this sharp decline in home ownership. Americans were seeing that maybe home ownership wasn't the great American dream. It was a declining asset, not worth investing a lot of money in. And that trend continued for quite a while, all the way through to about 2015. And then we turned the corner and bottomed at 63.5% home ownership, owner occupied, and has been climbing since. And currently, of course, it's 65.3%. But this is, we were at this level maybe 8 years ago. So we're back to where we were about 8 years ago. Who's buying? Who's increasing those numbers? Well, it's right across the board here. In the age of 35 and less, the rate of ownership in the first quarter 2019 is the darker blue. First quarter of 2020 is the lighter blue. So we're seeing an increase in all age brackets. I think the thing to watch would be right in this area, right in here. Millennials are starting to buy. Millennials are 20 to 40 years old right now. And they're the largest demographic segment in our population. So I think we're going to start seeing these numbers pick up quite a bit right in this area. So the National Association of Home Builders, here's a quote from them. The number of homeowners increased by 2.6 million. This is in the first quarter of 2020, while the number of renter households declined by 600,000. Indeed, the number of homeowner households has been climbing since the third quarter of 2015, while the number of renter households has been in a downward trend. This implies that the transition from renting to owning has been a powerful driver in the net increase in households. And there's a few reasons for that, and we'll move on to take a look at those. Well, here's a big factor. The median asking rent price has been on a steady increase since 1988, and these increasing rents have helped push tenants to start looking at the opportunity and possibility of buying instead of renting. They could then take advantage of tax deductions, of course, the security of a home, building equity in an improving or increasing asset, all those things that home ownership can provide. And so the Z report here, they note that our current level of available homes on the market, or the inventory, as a percent of all the households in the United States, sits at its lowest level ever. There's no great number of homes available out there. We're at a very low level of inventory. How about the traffic? How's the traffic been? Let's take a look at the buyer traffic here. This is in the month of March. The dark blue being states that had strong buyer traffic. The light blue is stable traffic, and then the gray states weak traffic. I don't see a gray state on there, but there you have it. And in our little market, March, the first half of March was good. The second half, we came to a screeching halt when the stay in place ordinance was passed. So that's buyer traffic in March, and you can see it was pretty significant across the nation. Here we're looking at seller traffic, but we're going to start in February. Strong is the dark blue, stable is the light blue, gray was weak. So coming into the year, in February anyway, we had weak seller activity in California and weak to stable across the majority of the United States. And then March came in along and seller traffic fell off completely. Sellers are sitting on the sideline. They're waiting for this COVID-19 thing to be behind us. If you're a homeowner considering selling, now might be a really good time to get in there. On the market, we have buyer activity, we have limited inventory. And buyers or tenants, if you're out there on the fence about buying, here's a little incentive for you. If you were to take out a $400,000 mortgage in December of 2019, the mortgage rate was about 4%. You would have paid this much interest over the 30-year life of that loan. Today, if you were to take out that same $400,000 mortgage for 30 years, it's at 3.23, less interest paid over the 30-year life of the loan. How much less? $63,000 plus. So there's a very good reason why you should be out there taking a look, seeing if you can afford and qualify to buy a house. So I think that's the end of the presentation. If you have any questions, comments, or suggestions, give me a call or contact me via email or text, and happy to discuss it with you. Thank you very much for watching.